Our first presenter tonight is Mike Rosenstrike, Managing Director of Helix Resources. Mike has a combination of technical and commercial experience with over 20 years in the banking and mining sectors. He's been a geologist in exploration and mining projects for many years, and he's also worked as a resources financier with Rothschild & Sons. Mike was a founding director of Bass Metals and held senior management positions with Consolidated Gold and Hexagon Energy. Ladies and gentlemen, I give you Mike Rosenstrike from Helix Resources.
Thank you very much. It's a bit chilly tonight, so hopefully this series of discussions will keep you entertained and warm. I joined Helix in January of this year after about a 12-month search for copper or nickel opportunities in Australia. I was drawn to Helix by the opportunity to grow the existing copper resources that they have, and also by this incredible opportunity to discover more copper resources in this very strategic land position that the company holds. The team and I are really excited now that we've got a heap of money to spend on the ground, and I hope at the end of this presentation you'll be as excited as we are, and I think as some of our shareholders are. Okay, so look, what this slide is trying to say is that high-grade copper is a great way to be mining in a manner that has a lower carbon footprint. And this whole issue around decarbonising the economy, etc., is something that we are conscious of in the company, and you'll see us and a whole range of our peer companies more conscious of these aspects, which we frame up in this phrase ESG. But let's get on and talk about the company and its assets. That's what high-grade copper mineralisation looks like. And if I want to frame the investment highlights, that will do, because that's what we've been drilling over the last month or so in Cobar area. But if you look at some of the other investment highlights, we've got 2 existing copper resources. We've had 3 hits out of 3 holes. We're working in a fantastic neighbourhood that's very mineralised with copper and very rich in infrastructure. We have a rejuvenated management team supported by a strong board who are very much engaged. And all of this is underpinned by the current copper price environment, which is being driven by this renewable energy, mobile electrification revolution, which is happening. Since joining in January, we've raised $7 million. And I say thank you very much to JP Equity, who managed both of the 2 raises for us. And thank you to many of you who I think participated. The first raise was at 1 cent, $3 million. The second raise was at 2.7 cents, $4 million. And the share price today is sitting somewhere around 3.5 to 4 cents. It's taken our market cap from under $10 million to around about $45 million today. And I think at the end of this presentation, I hope you'll see, like we do, that there's a lot more of this journey to travel. I want to really emphasise the point that we're not taking a portfolio approach in terms of having many projects all over Australia or all over the world. We're absolutely backing ourselves to be successful in finding more copper in the Cobar region, end of story. And the Cobar region is very well known for high-grade copper deposits. They've been mining these there for 150 years. And I think the outlook, the future, is very bright to be there for a long time yet to come. So this map shows the neighbourhood that we're working in and shows the quality of our neighbours. On the right-hand side are our Colorina tenements. On the left-hand side is our Canbelligo tenements. And you'll notice on the right-hand side there, those wavy lines, they are the mineralised trends that we're chasing. And look who's to the north of us. Aeris Resources with their fantastic Constellation discovery. That discovery was reported late last year, but it's on tenements that they've held for over 25 years. and their Tritton operational hub, that's been going for over 25 years as well. So this is a prodigiously mineralised region, and we have a very strategic tenement holding in it. This is a really important map, and there's two takeaways I'd like to share with you from it. First of all, when I went to site in April, I just couldn't get the smile off my face as I'm driving around these sealed roads on this flat farmland. Access is just fantastic. After wandering around Tasmania and Africa and Egypt and the Kimberley for a long time over recent years, the access and the commitment and support from local stakeholders is just terrific. But the other important takeaway is the way that we look to unlock value here on this property. The phrase underexplored is hackneyed and cliched, but I think you'll find that when it comes to these tenements, it is very apt. And in particular, what I'm referring to is that copper is conductive. The copper minerals, the copper sulfide minerals are also conductive. And we have a geophysical survey technique called electromagnetics, which detects the response or the conductivity in the rocks. It is a prime exploration tool for finding copper deposits in the Cobar region. And yet, at the start of this year, only 20% of our 120 kilometre strike extent of prospective copper mineralised structures had EM coverage. And so for the rest of the tenure, we were kind of operating blind, if you like. And after raising the money with Jason and his team earlier this year, within days we had a helicopter flying this aerial EM survey, and in early March we had the results. And that really sets the scene for the rest of this discussion. Actually, so what you have on the right-hand side is our Collarina trend, which has our CZ deposit resource located in it. And on the left-hand side, the Cambeligo tenements with the Rochford trend and the Mariula trend cutting through north-south. And what I'd like to do for this discussion now is just talk about the Collarina trend and the Rochford trend and highlight to you not only the advanced targets that we have, but also the flow of regional prospects coming through. So here's the Collarina trend. It's 60 kilometres north-south. The only area that had EM coverage before March is the area highlighted around the CZ copper deposit. And yet when you go to the north, right up the north there is a label Hermidale-Quanda area. Every morning the geos would drive past there, they'd see historical workings, they could pick up a rock and get a 5% or a 6% copper assay, but there just wasn't sort of enough geological information to really get them leaning into that target and doing the mapping and the sampling and the drilling that's required to upgrade a resource until we finished the aerial EM survey. And that survey highlighted 3 high confidence, strong conductance anomalies in and around that Hermidale area. So suddenly that prospect lights up and it shoots to the top of the priority list in terms of our regional targets. And so what you can see now is that that VTEM survey is giving us context to be able to rank and prioritise all of our regional targets. And that's really important to be able to focus your money and your effort on your best targets. Exploration is a bit of a numbers game. The more targets you test, the luckier you'll get. And with this EM survey, we're now able to assess lots of targets. Let's focus in on the CZ deposit itself. This is a genuine high-grade copper sulfide resource. You can see some of the assays there, 6.6% copper, 5% copper, 4% copper, over quite an extent. The geometry of that deposit is controlled by a regional fold. And in this picture on the left-hand side, you can see those folds zigzagging across the countryside. So there's an opportunity to grow this resource by drilling down that plunge, but also by drilling the parallel fold hinge positions, which are supported by some of that coloured area there. These are surface EM responses. So there is geophysical and structural geological evidence to support extensions and repetitions of the CZ deposit. We will be drilling here in July. We'll be chasing that northern hinge zone, we'll be following up on the central zone deposit, and we'll be chasing that southern hinge zone. And I said earlier, we're on this amazing regional scale mineralised structure that goes up to Constellation and Eris and down to Loxley Resources Tottenham copper deposits. And if you want any evidence that our geology has affinities to those deposits, you look at the textures in the drill core from Eris's Constellation with ours. Now, if we move to the west, to the Cambalago deposit, this is the area where we're drilling and which has set our share price alight recently. That white shape is the outline of the joint venture with Eris. We've earned in, we have 70%, they have 30%, we collaborate technically and we co-fund the exploration. Again, we have a range of regional targets here which are being highlighted by that EM survey, so we can rank and prioritise and do systematic work. This is a long section of the Cambalago deposit where we're drilling right now. It's 400 metres across, or from north to south, and it extends about 240 metres vertically from surface. The orange circles are the previous drilling. There's been no drilling on this property since 2013. Indeed, there were untested downhole EM targets that we've reprocessed and followed up. So we've drilled hole 1, which is labelled there, and we got 25 metres of copper sulphide mineralisation, right on target, exactly where we expected. We drilled hole 2, we hit some spectacular copper mineralisation, our share price went through the roof, we turned over 120% of our issued capital. And then we moved 200 metres to the north and we drilled hole 3, and again, we've hit the lode exactly where we expected. So you can see we've really stretched the mineralised envelope 100 or so metres vertically down, 200 metres across. And this slide here, the picture of the drill core, that's what high-grade copper sulphide looks like, that brassy yellow material. You don't need an assay to tell you that that is on the money. Assays are pending. We do need assays to report it, and they're going to come out in June. I think we've got 2 weeks of June left. I'm hoping that they're imminent. But you can see on the section on the left-hand side how that high-grade shoot is connecting up to the resource outline above it. And right now we're drilling that hole that's shown there in between. We're really reliant on geophysics to help us target, and that geophysics is not only downhole in detail, but I'd just like to step back out again and talk about that aerial geophysical survey that we undertook in March. Here we have Cambalago in plan, that limey green shape in the middle, and thankfully the EM survey sees the Cambalago deposit as shown by the red shading around it. But look what else that EM survey sees. To the north, it sees that large anomaly. It sees another anomaly to the south and another one to the west. All of this within 500 to 1,000 metres of the Cambalago resource. So what an opportunity to grow that mineralisation, not only around the Cambalago drilling, but to the north, the south and the west. And that's the work we're going to undertake. So in short, we are very well funded now to virtually have a drill rig on site continuously till the end of the year. And what that means is continual news flow, it's momentum in activity, momentum in investor releases, and it also creates momentum in and amongst the team. We get smarter at how we discover and how we work. And that's what our investors can look forward to. So to wrap it up, we've got about $5.6 million at bank as we speak. We're working hard to spend it as fast as we can in the ground to follow up on these positive copper results that we have. So a very aggressive exploration program. We've got a new exploration management team and new eyes, new energy, and we're already getting some positive results out of that work, and all of this in an environment of very strong copper price. So thank you very much, and I look forward to sharing these updates further with you.
Well done, Mike. Excellent presentation. I do like that term, on the money. It sort of reminds me of my days hanging around the Kalgoorlie Race Club, a term often thrown around. And look, Mike, I must say that I have first-hand experience of just how valuable copper is. I'm currently building a house over in Coolbinia, and some poor soul who obviously had a very difficult upbringing and is not responsible for his actions decided to strip the copper out of all of the taps before we got to lockup. So obviously a very, very valuable commodity. Our next speaker is Dan Thomas, Managing Director of Hammer Metals. I might just pause to say that all those years ago, Hammer Metals was the very first Bulls and Bears client. So I'm delighted to be introducing Hammer Metals. I'm not sure that they knew at the time we didn't have any other clients, but since then we've managed to secure quite a number. So Dan, great to see you here tonight. By way of background, Dan's got about 20 years of experience in operations, corporate development, project management, project finance, and mergers and acquisitions across the resources sector. He's worked across Australia and internationally in a wide range of commodities, including base and precious metals. He also held positions with Wesfarmers, PTT Asia Pacific Mining, and Mitsui E&P Australia. Ladies and gentlemen, the Managing Director of Hammer Metals. Thanks, Dan.
Thanks, Matt. Thanks to the JP Equities team and the sponsors for this evening. It's fantastic to be here talking about Hammer Metals in what is really a strong copper price environment. And I think at the moment what we're seeing is obviously some supply disruptions around the world with COVID. But when we pause to look at future metals, and we're here to talk about future metals, what does the world look like for copper moving forward? You have a look at some of the analyst projections, and the projections for the next 25 years, copper demand will equal the entire consumption in human history to this point in time. So when you start thinking, what does that look like for future metals and the copper price, I think it's pretty strong going forward. You have a look at global average grades of copper reserves around the world, they're below less than 0.5%. So when you start looking for projects around the world and you look at projects in a portfolio, I think what we have at Hammer Metals, which is 400,000 tonnes of copper equivalent metal at sort of 1.3% copper, these are the types of projects into the future that I think get developed. So in terms of what we're trying to do, we're trying to build copper inventory in Mount Isa, a prolific base metal province. And as I said, we've got a great head start there with 400,000 tonnes of copper equivalent metal. We've got two projects, one in Mount Isa, the other one here is in the Yandal Belt, some 300 square kilometres in the prime Yandal Gold Belt. The focus for us at the moment is very much in Mount Isa. We've got a team working with a company that has made world-class mineral discoveries before, Russell Davis and Ziggy Libanecki with the Gold Gruyere deposit, 6.5 million ounces. The team has experience in taking a junior company through that development life cycle. We're surrounded by Tier 1 deposits, both in Mount Isa and the Yandal Belt, and I think there's two better commodities at the moment to be exploring for than copper and gold. In terms of the company, current market capitalisation of about $80 million. We have $11.2 million in funding in bank, having just completed a raise and a share purchase plan. The directors own 13% of the company, and each round of funding that we've done, the directors have contributed to the raisings. So not only do they provide technical advice, but they're financially aligned with what the company is trying to achieve. In terms of our tenure, we sit in between Mount Isa and Cloncurry. As I mentioned, a lot of Tier 1 deposits around us. The Mount Isa mine, George Fisher, owned by Glencore, Ernest Henry, large-scale iron oxide copper-gold project, Cannington down to the southeast. And for a junior company, what we've really been able to do is amass some 2,200 square kilometres of tenure in one of the prime mineral districts. There's not many juniors out there with this sort of land holding in such a prolific base metal province. And we've got a fantastic start because we've got 400,000 tonne of copper equivalent metal in a JORC resource already. Not only that, we've got a recent copper discovery as part of our JOGMEC joint venture. So the areas you can see there in the dark blue, we're in a joint venture with JOGMEC. JOGMEC are earning a 60% interest in those areas by spending $6 million. And in January this year, we announced a discovery at the Trafalgar deposit. The Trafalgar deposit I'll talk a little bit more about in a moment. In terms of our portfolio there, we've got 4 JORC resources within 25 kilometres of the highway that runs between Mount Isa and Cloncurry. So all of a sudden, when you're that close to infrastructure, you're building a portfolio of copper and gold assets. The story around getting a development up off the ground is, I think, pretty good. What we need to be doing is adding metal inventory, making new discoveries, adding to the projects that we already have. With $11 million in the bank, we can start to look to do that. In terms of the discovery, we're 4 holes into the Trafalgar discovery, stretching for about 200 metres of strike length, down around 100 metres. It's still open to the north and the south at depth, to the east and the west. We're back there drilling as part of our joint venture at the moment, so I expect results from that to be coming out in the next 4 to 6 weeks. It's part of a broader exploration program we're carrying on in Mount Isa. So not only are we doing work on the joint venture, we're also drilling our 100% owned prospects. And in terms of the leverage, making a similar style discovery to what we made at Trafalgar on our own project is where that opportunity is really at. And I think we're drilling some good targets at the moment. So here's a little video. We'll go through this. And this is a 4.5 kilometre trend along Trafalgar. And what you can see here is a number of the old workings from where these deposits were mined pre-World War I. So Trafalgar itself were mined before World War I. This whole trend, 4.5 kilometres, has got 2 drill holes in it before we did any drilling here this year. So you can see the shafts just at the bottom here. We're going to fly over the Trafalgar deposit in a second, which I said was mined in the early 1900s, but unexplored until now for a variety of reasons. We've got 4 holes in there, drilling more at the moment. This trend continues for about 4.5 kilometres. We'll have a look in a second at the magnetics. The magnetics line up. Just on this little ridge coming up now, you'll see some old costines, some old workings, some old pits. This area hasn't been explored, and this is where we're looking to add metal inventory to what we've already got in Mount Isa. We'll pull up at a couple of shafts here. For pre-World War I, these shafts went down to about 70 metres of depth. They're pretty skinny. I wouldn't fit down them today, but the old timers were pulling out really high-grade ore. They stopped mining these things when the grade dropped below 10%. So these are the types of areas we're exploring now, looking to add tonnes. In terms of the trend and what you can see there, the bottom left, you can see the bright red, the 4.5 elongated stretch. That's the magnetics for the area. And when we've drilled and we've seen copper mineralisation, we've seen it occur with magnetite. So pretty good marker for the geology of what you're seeing. And you can see all the little white dots on there for that 4.5 kilometre stretch. They're the old workings or the old shafts that were sitting there. So that stretch, 2 drill holes in it, the Trafalgar discovery, and that's an area now that the joint venture is pretty excited about getting back to exploring and drilling out. In terms of the overall position, that's within the JOGMEC joint venture, and you can see on the right-hand side there, the blue boundary pretty much depicts where the JOGMEC joint venture is. To the north, 100% hammer ground. To the west, 100% hammer ground. You can see those magnetic trends run right up into our own prospects there. So as part of that drilling program, just to the north, you can see a prospect Lakeview. We're drilling there. We're drilling approximately 4 holes at that target. We'll have assays out over the next couple of weeks for the drilling that we've done there, along with some drilling that we've done to the west at Neptune, again on our own 100% areas, and they don't look too dissimilar to what we saw at Trafalgar in terms of old workings, copper in rock chips, copper in soil, old spoils. You can see that copper and gold mineralisation run through these deposits. So that magnetic trend running to the north runs up to our deposits at Elaine. So that's a 9.5 million tonne, 1% copper ore body plus 0.3 grams per tonne gold. So this trend is mineralised all the way up there. It's some 14 kilometre stretch. I think it's some great property to be exploring in a base metal province, smelter nearby, a railway out to port, power line running next to the highway. I think it's got a lot of things going for it, and it's an area that really has suffered from, I guess, a lack of attention over the last decade as we're moving into a stronger copper price environment. These are the types of next-tier projects that I think become development targets. I mentioned there those 2 trends. It's a bit hard to make out on the bottom right-hand picture. There's a trend that runs from Trafalgar and Victory to the south. It runs for 14 kilometres up to our deposits at Elaine and Jubilee. I should note that the Jubilee deposit is in a joint venture with Glencore, but there's also a trend that runs out to the west from the Neptune group of prospects all the way up to Blackrock and Sunset. You can see some of the intercepts there at Blackrock and Sunset. Blackrock, quite broad intercepts at sort of 78 metres at 0.5% copper with some gold. And Sunset, bit smaller, 24 metres, but much better grade at 1.4% copper and gold. Those 2 particular prospects don't have resources around them, but have drilling to indicate that we could probably take them up to a resource. So in terms of how we're spending our funds moving forward, they're the types of targets, again, that we'll be looking to drill in the second half of this year and take through into a resource status. Here's a few pictures of what the typical background looks like there. A lot of copper mineralisation on surface and a lot of old-time workings that you can see there. We're drilling 7 targets. Mike before said you've got to drill a lot of targets. You've got to keep everything moving forward and testing a lot of targets to get lucky. We're testing 7 as part of that 4,000 metres that we're drilling currently. That's probably halfway through in terms of the drill progress. Assays are probably 1 to 2 weeks away, I think, with that program continuing to fill our news for the next 6 to 8 weeks, I think. I should very briefly touch on our West Australian gold project because we have spent a lot of time and a lot of focus there in the past 12 months. The project here sits next to the Bronzewing deposit, 3 million ounces historically produced. We're less than 100 metres away from Northern Star's project there. The property hasn't been drill tested below 100 metres of depth. Again, very few properties globally sit next to Tier 1 gold mines that haven't been explored. Another fantastic opportunity for us to test in the second half of this year. So what do I want to get across? We're busy. We're drilling programs here in WA for gold, in Queensland for copper and gold mineralisation. Big systems. We've got a copper inventory already. Copper and gold, no better place to be at the moment as the world moves forward. We've got the right team to be exploring for both of them and we're well funded to deliver a significant set of news for the coming year. And so I might leave it there. If anyone's got any questions, my email address is in the presentation pack. I welcome anyone to get in touch with me if you can't catch up with me later tonight. But thank you for the opportunity.
Well done, Dan. Good stuff. Okay, ladies and gentlemen, the next speaker is his company is listing on the ASX on Tuesday. And for those of you that have been following different listings around the place, I know that's probably everybody in this room, you would note that not too many new listings are going south at the moment. It's a red-hot market. And so you might want to sit up and take note of this particular presentation by Justin Tremaine, Managing Director of Future Metals. Justin has extensive experience in the funding of natural resource projects in the junior and mid-tier sectors. He's undertaken numerous advisory roles for resource companies, including acquiring and selling assets. He was the Managing Director of Exor Resources prior to being appointed the Managing Director of Manus Resources in late 2020, and he's held positions with Investec, NM Rothschilds and Sons, like Mike, Macquarie Bank, and also Grant Samuel. Ladies and gentlemen, have a good listen to this one. I give you the Managing Director of Future Metals.
Thanks, Matt, and thanks for JP Equities for putting on this great night to present for the first time Future Metals. As Matt mentioned, we're a brand new company. We list on the ASX Wheeling next Tuesday, having raised $10 million and completed the acquisition of 100% of the Panton project here in WA. So it says there, Australia's highest grade PGM project. Well, it is at 5 grams per tonne. It's also Australia's largest PGM project with a resource, a JORC resource, of 2.4 million ounces at 5 grams per tonne. And that includes 2 million ounces at over 6 grams per tonne. This is a unique deposit not only for Australia, but it's probably the highest grade undeveloped PGM project in the world. As I said, we've acquired 100% of this project and we'll be listing next week as a new company, Future Metals, under the ASX code of FME. The resource I've touched on, not only does it have 2.4 million ounces of PGMs, it also has over 30,000 tonnes of nickel, which is a project in itself for most companies. And it's palladium deposits. So PGMs make up predominantly platinum, palladium, and 4 other minor PGM metals. This is quite unusual in that it has more palladium than platinum, which at the time when palladium prices are at record prices works very much in favour of this project. The resource starts at surface, at outcrops. It's completely open in all directions. We've signed a 10,000 metre drilling program already, and we'll get drilling straight away as soon as we list, and we'll be looking to grow this resource significantly from the 2.4 million ounces. A BFS, a JORC BFS, was completed on this project back in 2003. So 90% of this resource sits in measured and indicated, not inferred, measured and indicated, and it sits on granted mining leases. And it's exceptionally well placed, not only in a Tier 1 jurisdiction of Western Australia, but 1 kilometre off a sealed highway, the Great Northern Highway, which runs up to the port of Wyndham, where we'd look to export concentrates from. So joining the board is myself, and Matt's given a bit of a background there. Also Alan Mulligan, who has extensive experience with PGE. He's a first-class mining engineer, spent about 15 years with Lonmin, one of the preeminent PGM producers in South Africa, and has had prior experience with this project back in the early 2000s when the BFS was completed. So he's joined the board in technical capacity. Rob Mosick's joining the board in a non-executive capacity, who also has extensive experience in PGMs. And I'll introduce later on Mick McMullen, who's joining as an advisor to the board. Mick McMullen runs Stillwater Mining Company, one of the largest PGM producers in the world, producing over 600,000 ounces of PGM before it was taken over by South African PGM producer Sibanye. He's joined the board because he had a prior look at this project when he was running Stillwater, wanted to buy the project, and now had the opportunity to get involved personally. Also to note is Shane Hibbert, who's joining us as exploration manager. Shane drilled 90% of the holes that sit in the current resource. When I approached him, it took him about 5 seconds to take the opportunity to come back and drill some more holes here and grow this resource further. So he knows the area like the back of his ground. As I mentioned, on granted mining leases, Tier 1 mining jurisdiction of Western Australia, you couldn't ask for a better positioned project off the highway. There was a BFS completed. Not only was the BFS completed, there was an environmental study done with full flora and fauna surveys completed. We have to go through a new approval process, but that study that was done 20 years ago did not identify any impediments to the development of this project. And in fact, the previous owners of this project put in place a decline to access the top of the ore body to undertake bulk sample metallurgical test work, and that decline sits there now, which will be used going forward. So great location, excellent infrastructure. So here's the geology. You can see the outline of the mining licences there. 3 mining licences. It's a layered intrusive, which plunges to the southwest, has a strike extent within our permit area of 10 kilometres. It's about 2 kilometres wide, and it's a syncline structure which extends to about 1.7 kilometres deep. The mineralisation is associated with chromite reefs that outcrop at surface that you can see mapped there in red, and the current resource that's been drilled has been segregated over 4 zones: the A zone, the B zone, and the C zone and the D zone. But what's been drilled to date, that 2.4 million ounces, represents less than 25% of the mapped outcropping reef. So significant potential to grow what is already the largest PGM deposit in Australia, much, much more. So there's the resource. As I said, 90% of it sits in measured and indicated. It's been over 45,000 metres of RC and diamond drilling gone into this resource, so a lot of money spent on it. Of particular note, the 5 grams is very high grade, but that sits within 2 reefs, the upper reef and the lower reef. The upper reef, which is really what we'll be focused on, contains 80% of the ounces, or 2 million ounces, at over 6 grams per tonne. This is, a very unique and high-grade PGM deposit. Over the last 10 years, the focus on this project by the previous owners, Panoramic Resources, was on metallurgy. They didn't drill a single hole. The resource that sits there now is what sat there back in 2003 when a BFS was done. They had a significant metallurgical breakthrough. They proved through test work that they could generate a high-grade flotation concentrate of over 250 grams per tonne PGMs with an 80% recovery, just through conventional crush, grind and float. And we'll be doing met test work to demonstrate that's repetitive and representative of the ore body before moving into feasibility studies. Just a quick touch on what's happened with the PGM price. When a BFS was done in this in 2003, the prill price, or the mix of the PGMs in this resource, sat at $410 an ounce. It was reviewed in 2011-12 when the PGM price was $1,200 an ounce. Today that sits at about $2,400 an ounce and at a lower exchange rate. So it's 5 times the price when the BFS was done and over 2 times when it was last reviewed. As I said, palladium dominant resource with over 50% of the value sitting in palladium. Here you can see the upside here. This is the plunging, high-grade plunge sitting underneath the intrusion that we'll be targeting with drilling. The last drilling which hasn't been closed off, 8 metres at 4 grams, 6 metres at 7 grams. We'll be drilling some holes to chase that high-grade plunge up. And here in red, you can see the outcropping chromite reefs that contain the resource in red, and in yellow is the area that hasn't been drilled. About 70 to 75% of the mapped reef is yet to be drilled. So not only depth extensions, also strike extensions. So when we list next week, we'll be capped at about $35 million with about $8 million in the bank, 100% ownership of this project. There's really only one other PGM project listed on the market, which is capped at about 6 times our market cap, with half the ounces and half the grade. I might just take that opportunity to pass you on to Mick McMullen, who will give you a bit of an overview on some of these other comparables around the world. I think he's either owned them, done due diligence on every one of them, so he's probably better placed to see how Panton compares to some of these other projects. Thanks, Mick.
Thanks, mate. I've got 1 minute. So, yeah, look, I ran a very large PGM miner and smelter and base metal refinery. During that process, we looked at virtually every PGM asset in the world. If you look at this graph here, you know, apart from Chalice, pretty well all of the others are either in South Africa or there's a few in Russia. They're basically uninvestable. You know, you wake up tomorrow, you don't own the asset, or there's some other, you know, issue. Generation Mining, we actually used to own that. It is the lowest grade PGM development asset in the world in an area that's probably going to require about $800 million of capex. So we like this thing because it was, you know, good grade, you know, reasonable capex in a decent area, on granted mining licence. We just couldn't get the major shareholder at Panoramic at the time to sell it to us. So, you know, this thing's coming to market at an undemanding multiple. And really this is where we're looking at here is highest grade, which is grade on the vertical axis, relatively smaller on the sort of the size of the bubble, but we think with potential to grow that. But you're coming on at less than $20 EV per resource ounce. So, you know, compared to, well, podium at whatever it is, 100 and something, palladium 1, some of these other things, you know, are either very expensive or this thing's coming on very cheap. So again, the reason I'm back in Perth, I got involved. I know some of the guys behind it. I like the asset. We just thought it was a pretty good deal. And as I say, when it comes onto the marketplace, there's very few areas for Australian investors to get direct exposure to platinum and palladium in a decent jurisdiction. And really, just in terms of metals, you know, what are they? What are they used for? Palladium is predominantly used in petrol or now hybrid catalytic converters. Platinum's got a bit more of a different use, but the big use that's coming apart from auto catalyst is fuel cells. And hydrogen fuel cells, as you've all heard, like that's all the way of the future. It's been the way of the future for a long time, and really in the last 12 months is only when that's actually started to be real. So there's a few other minor elements. I'm going to go now, and happy to take questions afterwards. Thank you.
Mick, I've got one question for you. Just a second, hang on.